Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on RTX Corporation, a major aerospace and defense company formerly known as Raytheon Technologies, known for its advanced technologies in defense, cybersecurity, and aerospace. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
RTX has been a leader in the aerospace and defense industries, but from a behavioral finance perspective, how do biases like loss aversion and the endowment effect influence their decision-making, especially in areas like defense contracts and technology development?
Loss aversion is particularly relevant to RTX's approach, especially in the context of defense contracts and long-term government relationships. The defense industry is heavily reliant on securing and maintaining large contracts, often with government entities. RTX's focus on minimizing the risk of losing these contracts drives the company to invest heavily in maintaining and improving its technological capabilities and ensuring compliance with stringent government regulations. This risk-averse strategy helps RTX preserve its market position but can also lead to conservative approaches in areas like art, where the company may prioritize proven technologies over more speculative innovations. The endowment effect also plays a significant role in RTX's strategy, particularly in how the company values its established technologies and platforms. Given the significant investment and development efforts that have gone into creating advanced systems like missile defense or avionics, there's a tendency to overvalue these existing assets, which can sometimes slow the company's shift towards newer, potentially disruptive technologies. This attachment to established platforms can be beneficial in terms of reliability and customer trust, but it may also limit the agility needed to adapt to rapidly changing technological landscapes.
And this focus on leveraging established technologies while managing risks has helped RTX maintain its leadership position in aerospace and defense, appealing to both customers and investors who value reliability and long-term government partnerships.
Exactly. RTX's strategic use of loss aversion in preserving government contracts and the endowment effect in valuing its technological assets appeals to investors looking for a company that prioritizes stability and long-term returns. However, this approach also means that RTX must carefully balance the need to innovate with the importance of maintaining its established market leadership, particularly as new technologies and defense needs evolve.
Let's talk about diversity, equity, and inclusion at RTX. As a major aerospace and defense company, DEI is particularly important for RTX. How does this intersect with behavioral finance?
RTX's approach to DEI is critical, especially as the company operates in a highly technical and global industry where diverse perspectives can drive better decision-making and innovation. From a behavioral finance perspective, strong DEI initiatives can enhance RTX's ability to innovate and adapt by fostering a culture that values diversity and inclusion. A commitment to DEI allows RTX to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in aerospace and defense. For investors, RTX's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help RTX build stronger relationships with government clients, partners, and communities, which is vital for navigating the complex regulatory and social environments in which it operates.
Investors are increasingly considering DEI when evaluating companies, especially in industries like defense and aerospace, where the ability to innovate and serve diverse markets is critical to long-term success.
That's right. By embedding DEI into their corporate culture and technological development processes, RTX not only improves its ability to serve a broad range of clients but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to global markets, RTX operates in numerous countries, providing advanced technologies and services to defense, aerospace, and cybersecurity clients worldwide. How does the company adapt to different markets, and what role does behavioral finance play in this?
RTX Global strategy involves tailoring its products and services to meet the specific needs and regulatory requirements of different regions while maintaining its core focus on technological excellence and security. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with operating in diverse markets. RTX's ability to navigate complex international regulations such as those related to defense exports, cybersecurity laws, and aerospace standards allows it to maintain a strong global presence. The company's approach to understanding local market dynamics and adapting its strategies accordingly helps mitigate risks associated with geopolitical instability, regulatory changes, and economic fluctuations. By ensuring that its products and services are relevant and compliant in different regions, RTX can continue to expand its market share and strengthen its global brand.
And this adaptability is essential for RTX, especially as they face competition from both local defense contractors and other global giants. Their ability to maintain their brand's relevance and leadership in different markets is key to their continued success.
Exactly. RTX focus on understanding local market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the aerospace and defense industries while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in global defense needs, technological advancements, and competitive pressures.
Now, let's compare RTX to other companies in the aerospace and defense industries like Lockheed Martin, Northrop Grumman, and Boeing. How do the behavioral finance dynamics differ?
RTX dynamics are often compared to other aerospace and defense giants like Lockheed Martin, Northrop Grumman, and Boeing, particularly in their approach to defense contracts, technological innovation, and market expansion. RTX's strength lies in its diversified portfolio of defense, aerospace, and cybersecurity technologies, which appeals to investors looking for a company that is well-positioned across multiple sectors. Lockheed Martin, with its focus on advanced defense systems and aerospace technologies, appeals to investors interested in a company that is heavily invested in cutting-edge military solutions. Northrop Grumman, known for its leadership in aerospace and space technologies, attracts those looking for a company that is driving advancements in defense and space exploration. Boeing, with its strong presence in commercial and defense aerospace, appeals to investors interested in a company that balances military and civilian aviation. RTX behavioral finance dynamics are shaped by its reputation for technological excellence, strong government relationships, and global adaptability, making it an attractive option for those seeking stability and growth in the aerospace and defense industries. Global adaptability, making it an attractive option for those seeking stability and growth in the aerospace and defense industries.
And unlike Boeing, which has a significant focus on commercial aviation, RTX's strength lies in its diversified defense and aerospace technologies, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For RTX, the focus on defense, cybersecurity, and aerospace technologies provides a unique value proposition in the industry.
To sum up, RTX's approach to business is deeply influenced by behavioral finance principles, whether it's through their defense contract strategies, global market adaptations, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives RTX stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.